Good morning and welcome to this Wednesday, November 18th, 2020 edition of Trading Places Live here at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. We got, I thought it was kind of, I don't know, shouldn't talk about health crisis as being funny, but I did find the headlines on Pfizer this morning just a little bit funny. They had come out I guess it was last Monday morning with their COVID-19 vaccine, and they said that their efficacy rate, which is basically, their success rate, was going to be a little above 90%, right around 90%. And then on Monday, this past Monday, 2 days ago, Moderna came out and also provided great vaccine news and said that their efficacy rate was going to be about 94%, a little over 94%. So this morning, Pfizer comes out and says that they took a look at their data and actually their efficacy rate's around 95%. So I don't know, maybe we got a little battle going on there. Moderna may have to take a look at their data again. But anyway, I joke about it, but it is really good news. And the market has been responding certainly in that regard. A lot of companies that had been beaten down badly throughout the pandemic and were very slow to rally. They didn't rally like the Zooms and the Pelotons. They, really struggled. Many of them not even close to where they were back in February. And of course, I'm speaking about the airlines and the cruise lines and some of the hotels and gambling stocks and so forth. Those that have been directly impacted by this virus. They have really started to show some strength, and we'll talk about that a little bit later in the show. But I don't know. I just chuckled a little bit when I saw the headline. It's like, okay, you had your data, and I don't know. Now they went back and looked at it again, and things, I don't know, just another 5% popped out. Anyhow, let's take a look at what's going on in the market here in just a second. For those of you that are new to Earnings Beats, I just want to take you over to our homepage at earningsbeats.com. We do have a free newsletter. We'd love to have you join our community. We have thousands, literally thousands and thousands of folks on our free newsletter. Just type in your name and email address. We'll get you on there and start sending you out our email or send out the newsletter Mondays, Wednesdays, and Friday mornings. They come out usually before the market opens. We try to get it out before the market opens. And just educational content. It deals a lot with relative strength, earnings, things that we feature a lot here at Earnings Beat. So it just gives you a little bit more perspective as to how we approach the market. But I think it's a great opportunity to add something to your arsenal, no matter what you do, whether you're an investor, whether you're a trader, whether you use the MACD, the PPO, the RSI, the Bollinger Bands, whatever it is. I think you'll find that there's something that we do that will help in your trading. So we'd love to have you join our community there. Also want to mention tomorrow's the day. I get pretty excited when we get close to the draft day. I call it the draft day. That's when we have each of our four portfolios, and you can see those four portfolios down here. We have the model, aggressive, income, and strong AD. AD meaning accumulation distribution. So strong AD means obviously these companies appear based on their AD lines to be accumulated. And so those are our four portfolios. And every 90 days, we equal weight 10 stocks to put into these portfolios. And then the goal is to outperform the S&P 500. So here's our portfolio performance. We've got inception date. We've got performance since inception and also this quarter. And then we're trying to beat the S&P 500. So since the inception of each of these portfolios, we show the return of the S&P 500 along with this quarter's performance of the S&P 500. I think if you look at those numbers, we have a pretty strong track record. Again, we don't go back 40 years, but I will say the model portfolio now has been this tomorrow will end our 8th quarter of doing this. Model portfolio has outperformed 7 out of 8 quarters. That's a pretty good track record. When you look at the since inception return, 159%, and the S&P only up 34%, we're doing something right in there. So if you want to learn a little bit more about us, I think the free newsletter is a great way to go. If you want to be part of this draft on Thursday night, all it takes is a trial membership. You don't have to pay anything. We have a $7 fully refundable 30-day trial. So if you click on this, Sign up, you'll get charged $7, but we'll refund it back to you within 5 to 10 business days. So it's a net zero cost for 30 days, which will include our webinar tomorrow, picking our portfolio stocks. So really excited about that. If you, again, you want to be part of that, you're not already a part of our paid membership, you can join, free trial, and enjoy. Love to have you. All right, let's look at what happened on Tuesday. We had the Dow Jones Industrial Average down 167 points, a little bit of profit taking. S&P 500 down 17, NASDAQ down 24. Mid caps, though, another new high, up 4. Small caps up 5, up about 0.5%. Nice move there on the small caps. You can see small caps and mid caps more so than any other group. If you look at it on a percentage basis, these are the groups that are benefiting from this vaccine news and really from the lows that we saw back at the end of October. Been a really strong run in both of these groups. The other thing I would mention too is if you've been following me, you know that I talked about the close on December 27th to the close on January 18th. That has historically been the best time to be invested in U.S. equities. And look at what's happening. I mean, I'm not making this stuff up. Right on the 27th, I think we did have a couple of days where we went down toward the end of the month, but just like clockwork, we come roaring back. I mentioned that the October 27th to the November 6th period is the best period, the best 10 days, consecutive 10 days of the year. And look at what happened. I mean, we came roaring back. We did exactly what history tells us. So while history doesn't provide us any guarantees, it's a nice barometer to follow for sure. At least understand the tendencies of the market. As far as the sectors go, energy, another strong day, up over 1% yesterday, despite the overall market pulling back. This is a group that's been straight up since the end of October. And I would be looking for maybe a little bit of resistance as you get closer and closer to maybe 38.5, 39. But right now, we're closed yesterday, 36.48. I think crude oil prices, I believe I saw was up a little over 1% today. So I would expect that energy will remain fairly strong here in the near term. Real estate also did very well and broke above all these highs in August, September, October, still trying to climb up and get through that June high. We'll see if we can do that later this week or into next week. Utilities were the worst performer, but look at the chart. I mean, this is a group that's been going up. Bull markets, secular bull markets in particular, we're looking for wide participation. You know, energy finally participating. Real estate now breaking out to multi-month highs. Utilities pulled back, but still looks very strong. This is the wide participation, the hallmark of a secular bull market. Yesterday's action led to a really strong move to the upside in autos. If you didn't hear, Tesla was added to the S&P 500 or will be added to the S&P 500. And so as a result, all these funds that track the S&P 500 have to buy Tesla shares. So when that news comes out, it generally results in a move to the upside. And Tesla had that big pop leading autos. Also, NIO came out with their earnings yesterday. And I thought the numbers looked pretty good. We'll go over those in just a bit. But again, that's going to be more of an impact today. I did see NIO was up this morning. Not a lot, but this stock has gone up so much. It's unbelievable. The fact that it didn't have a sell on the news, and maybe it will by the time the day's out, but the fact that it's gone up so much, came out, reported earnings, and still has room to move up even in intra or pre-market action, I think is pretty impressive. So anyway, autos looking to break out again. Nice little ascending triangle, it looks like, forming here. The drug retailers yesterday took it on the chin, though. And it's never a good thing when the 800-pound gorilla in the room decides to come into your industry group. And that was the announcement yesterday. Amazon said they're going to start their online pharmacy. And that is never good, for at least not for other companies in the space, because immediately you got to figure some of their market share is going to be taken by Amazon. So the drug retailers took a big hit yesterday, down more than 7%, big volume. This was a group that was beaten down badly throughout the pandemic. and just recently started moving back up, had a really strong rally off that October low. Let's watch two numbers here on this in this area of the market. First thing I'd watch is that rising 20-day moving average. So yes, we had a horrible day, but we had a huge run in this group from 615 to almost 800 in 2 weeks. So you're going to get pullbacks from time to time, especially on a move like that. So that kind of news, there's no doubt, going to lead to some selling. Let's see if we hold that 20-day, and then the second level would be this breakout. After moving up to about 680, we pulled back, put a new low in, and then blasted off through that 680 level. So I think the 20-day, which is at 708, down to about 680 is an area that I would watch. It would not be bullish at all if this group were to fall back and fail to hold those two levels. All right, 10-year Treasury yield had one piece of economic news out this morning. October housing starts blew away estimates. Been getting some really good numbers out of housing, but I think the group ran so much, it's just been pausing. But the housing starts number came in at 1,530,000 units. The estimate was 1,460,000 units. So a really big beat there. October building permits came in slightly below estimates. The estimate was for 1,560,000 units, and it came in at 1,545,000 units. So mixed report. I actually look at the housing starts number more than building permits. Building permits are not required in every part of the country. So I don't know that they always give you exactly what's going on. Housing starts are housing starts. So that was a good number. I would expect that we would see some positive reaction in the housing group today, but we'll wait and see. Check that out. As far as the 10-year Treasury yield goes, let me update this and give you so far the action today. It is down 1.5 basis points, sitting now on the 20-day moving average. I'd like to see it bounce off of that. If you look back over the last 7 weeks or so, as we've been moving up, any kind of a move below that 20-day moving average, we've seen a quick rally right back up above it. So here we are on it again. And the market has held up pretty good while the yield's been going down, which I think is a really good sign. Because when the yield goes down, it means money's going into treasuries. Well, there's a couple reasons why money could go into treasuries. It could be new money, or it could be money rotating from the stock market. Rotation from the stock market to the bond market's not a good thing. That's not what happened. So what we've been seeing is new money maybe going into the treasuries. Maybe there's still a lot of folks nervous. After all, we still have the VIX in the 20s. But I think eventually what we have started to see really off of that August low and a double bottom, I think we're starting to see this push back to the upside. I think we're going to make a run in the yield probably to test this high up around 125. Probably will take us a little while to get there. I mean, I don't think that's going to happen until sometime in 2021, but I expect that we're going to get up there to that 125 level. And during that move to the upside, that's rotation coming out of the bond market. And I believe that rotation is going to go directly into the stock market. So I'm looking for higher prices. I've been very bullish throughout the year, even during the pandemic. You know, when you look back and you see what we've gone through over the last couple of years, and then look and see all of our major indices or most of our major indices at all-time highs, that should tell you something. We've been through a 100-year pandemic. We've been through, multiple periods of this trade war with China. And throughout it all, over the past couple of years, the market has shook it off and gone to new highs. What's out there that is worse than a pandemic that shuts the country down for a month and has all these restrictions in place in states throughout the country? What gets worse than that? And yet here we are, all-time high. I think we're going higher. All right, I'm going to move on and talk a little bit about these indices on an hourly chart. First up, the S&P 500. And here in the middle of the chart, I just gave you some information. I gave this out to our Earnings Beats members in our Max Payne webinar yesterday, and it's something I share rather frequently, just historical information and how the market tends to perform. This is the S&P 500 performance since 1950. These are annualized returns for these periods of the calendar month. So the 26th to the 6th. So we're talking about the 26th of January to February 6th, and then from February 26th to March 6th, and then from March 6th or March 26th to April 6th, and so on throughout every month of the year, and dating back 70 years. That's a lot of data. That is roughly, what is that, 4 or 5, about maybe 10, 11 days out of every month, which is roughly 1/3 of the month, but it's every month for 70 years. So it's 1/3 of all the data since 1950. Annualized, it's too bad that we don't flip the calendar on the 6th and go back to the 26th, because we do a lot better in the stock market with these kinds of numbers. But my point here is this is a very strong period. The 7th to the 10th, you typically see profit taking. 11th to the 18th, very strong. And then 19th to the 25th, profit taking. Plus, I think there's a tendency with options that we see the market pull back, especially if we've had a big run to the upside heading into options expiration and the week following options expiration. So I think you got to be a little careful. Anyway, I just highlighted the 19th to the 25th in the last 3 months, just so you can kind of see. I mean, we were down here, very choppy here. We finished down, but it was very choppy. Here, we actually went up. So I don't want to, paint a picture that says, hey, we're going to go down every time from the 19th to the 25th. But I think the historical tendency, if you look at this is 7 days out of every month. So it's roughly 1/4, just under 1/4 of all the trading days since 1950. I think it's 4,000 some trading days, which equates to about 16 years worth of data. So the equivalent, I mean, if you wanted to kind of put your mind around it, imagine that from now until the year 2036, we drop 8.69% every year on the S&P 500. How fun would that be for the next 16 years? That's the equivalent of what we've been through for the last 70 years during this period of the calendar month. So today's the 18th. Tomorrow is the 19th. Friday, the 20th, is options expiration. Right now, I think we look pretty good. I wouldn't be surprised to see in the short term market move a little bit higher. We do have futures up, and I'll show you the 60-minute charts going across the major indices, but I think we look pretty good. I mean, I'm not seeing any negative divergences. Some might look at this and say, well, equal highs and lower PPO. I don't look at it that way. When I get a move up and I come back down and I test that 50 and I get close to the center line, to me, there is no momentum in the market. The zero line is that is the, I don't know what you want to call it, but I mean, it doesn't get any lower than that in terms of momentum. I mean, when you're at zero, there is no momentum. Your 12 period and 26 period moving averages are exactly the same. There's no momentum. So, the analogy I always use is when baseball teams play in a 3-game set, they play, say, Friday, Saturday, Sunday. When they finish their game on Friday, they start over again on Saturday at 0-0. Doesn't matter what happened on Friday. When I'm looking at momentum, I think of it the same way. When I get a center line test, I don't care what anything back here looks like on the PPO. We're starting over. This is a new game. We're starting to accelerate in the PPO. We pull back. Usually the 20 period holds, and then you start to move higher. That's the way I look at it. Feel free to disagree. But anyway, that's the S&P 500. I think we got an uptrend. We got a nice little cup here. If it breaks out, we could see short-term movement to the upside. But if we do, I think next week we might pay the price. Let's see. Next up, the Dow Jones. Same thing. Nice little cup off this uptrend. Little sideways handle action. Maybe we get that breakout. 30,000. The one thing I'll mention here, that is a big number psychologically. Every 1,000 number is big on the Dow, but especially a 10,000 number. I mean, 30,000 is a big number. We got close to it back at the beginning of last week with the vaccine news. Couldn't get through. Got close to it again this week with the vaccine news. Couldn't get through. I don't think that's unusual, though. Historically, these big numbers, these big psychological numbers, I think you tend to see selling when you get there. But I do think we're going through. And I think when we go through, we'll probably see 31,000 and 32,000 pretty quickly afterwards. The NASDAQ. Now, the NASDAQ, notice we're not back up at the high from last week, and even that gap up from last week wasn't that strong. So we got to move up. We hit the 50-day. We're trending higher here. We just came back to gap support. The NDX, NASDAQ 100, big move up. Couldn't even hold on to the top of gap support. We moved into the middle of this area, but still fine. Hasn't broken out above the September high. So it's not, on a relative basis, it's not where the Dow and the S&P are. And this is the rotation that's been taking place over the last 2 or 3 months, and even more so over the last couple of weeks. The mid-cap index broke out above last Monday's high. So nice move up, pull back. There's your 50-day. There's your center line test. We're going up, and I think the PPO looks very strong here. SML, small cap index, even better. I mean, small caps. I actually did a Your Daily 5, which is a show that's featured over at Stock Charts. I did that yesterday. Yeah, yesterday morning. You can go to YouTube and search it. Just search Stock Charts, Your Daily 5, and then look. Hopefully it will be one of the more recent ones because I just did it yesterday. But one of the things I looked at was small caps relative to the S&P 500. I mean, if we pull this up, I could take a look at this versus the S&P 500, and then just put this on a line chart. And look since the beginning of October. Look at the last 6 weeks, 7 weeks. I mean, that's a lot of outperformance by small caps. We can't ignore that. And that's something I'm paying attention to as I get ready to prepare for the top 10 stocks tomorrow night, the draft for our portfolios. Small caps, which haven't had as much representation, might see a little bit more based on the fact that we're now beginning to see a lot of outperformance. Our strategy, again, we're trying to beat the S&P 500. So when I find areas that are beating the S&P 500, I'm going to start looking in those areas. So small caps definitely showing some strength. All right, let's keep moving. I'm going to go into some recent breakouts. Now, what I did on these breakouts is I ran a scan. I ran the breakout scan for the last 6 months, not the last year. So these are all stocks that are at 6-month highs. These are also stocks that are on one of our 4 chart lists, one of our 4 chart lists. It's either on, or it could be on multiple chart lists, but strong earnings chart list, strong future earnings chart list, raised guidance chart list, and strong AD chart list. Those 4 chart lists I ran to see which stocks on those 4 chart lists are at 6-month highs. Which one set a 6-month high yesterday? And one more filter was thrown in there. I wanted stocks that had scooters under 85. So in other words, their relative strength was not top of the chart. I didn't want to get stocks that necessarily were going up day after day after day after day after day. I wanted stocks that maybe had been basing for a while and were just breaking out. So you can see here, the first one that came up was Morgan Stanley, and these are in order of scooter. So Morgan Stanley is going to have a scooter pretty close to 85. But here's your sideways consolidation, and there's your breakout. It's also breaking out above the January, February high. So Morgan Stanley looking pretty good there. All right, I'll go through these pretty quickly. AVNT, a lot of sideways consolidation, breaking out. Now at earnings beats, what we do is we like to look at the AD line, which has been rising here, which looks good. Also like to look at these relative strength lines. So what's its group been doing? Well, its group just broke out above, and this is in the materials area, but the group just broke out to a 52-week high. So we know the group's been strengthening. The stock relative to the group is at about a 9-10-month high. So we got a pretty good stock within the group. The stock's been outperforming the S&P, and the group relative to the S&P has been going mostly sideways, but that's after a run-up. So I look at this chart and I think, okay, I like AVNT. But anyway, I wanted to give you a little bit more in-depth of how I would look at this. I wouldn't just look at the price chart. Again, we want to know relative strength. SNX. Synex, there's your cup, little handle, trying to make that breakout. Stock looks pretty good in that computer hardware space. SEE, this is sealed air, making a breakout. AD line weak. But one of the stocks I avoided putting into our aggressive portfolio back on August 19th. Let me show you the stock. I wish I'd put it in there. I didn't because the AD line was going down, but it was right in here, August 19th, that I liked SunPower. I mean, if you look at the relative, well, here's renewable energy. Here was the relative strength just starting to tick up. It was beating the S&P, and the renewable energy space was crushing the S&P 500. So I was really looking at it, and I almost put it in the aggressive. It was the last cut I made, but I took it out because of the AD line. And look at the stock. It's gone absolutely crazy. The stock was under $8 back then. Now it's 20. Would have been 150% winner, but didn't go with it because of the AD line. Looking back in hindsight, maybe that was a mistake. The AD line isn't the primary indicator. The AD line for me is a secondary indicator. I like the other things. I really like the renewable energy space. Probably should have gone with it, but anyway, didn't. All right, let's take a look. That was Sealed Air we looked at. So on assignment, ASGN. I guess they changed their name, ASGN Inc. AD line looking pretty good. Did make the breakout, volume picking up, and looks pretty good across the relative strength lines. So this is how I would be looking at these stocks breaking out. HCA Healthcare breaking out. Healthcare providers breaking out. This is another one starting to show some nice relative strength. But during the pandemic, you can see the stock and the group was struggling. Outside of that early move in April, rest of the summer, throughout the summer, this was a group that was struggling, starting to come back. So that's a bullish development for the group. Another one, I think I may have mentioned this one recently in a daily market report. I can't recall, but this stock looks pretty good to me. Nice little cup here. AD line good. Look at the move in the transportation services. And while the stock has been coming down relative to transportation services, only during this consolidation period, it was at a high, nearing a 52-week high versus its peers when it set its price high. But during this consolidation period, the groups continued going up, and this stock, while consolidating, has lost some relative strength. But I still like this stock. Love the volume here. Even though it gapped down, it rallied back on some nice volume, and now moving up and just broke out to a new high yesterday. Let's do one more of these real quick. Let's see if there's one on the list. I'm going to look at EW. The scooter was only in the 30s on this stock. This was the lowest scooter stock that met the criterion. We got a false breakout. I think a breakout above, say, 87.5, 88 on a closing basis would be very bullish. I like the fact that we had heavy volume and got that false breakout. I think we could pull back. If we do, watch that rising 20-day. That would be maybe a little bit of a flyer because we haven't gotten the breakout yet. But I do think that EW is going to rally after this consolidation. And this could be a high. This could be a left shoulder, neckline, inverse head. Maybe this could be all part of the neckline test. And then another pullback, even to that 20-day, could be a inverse right shoulder. So I think that one looks pretty good. All right, moving on to earnings. Well, first, let me show you Lazy Boy, which reported. The stock is up 5% in pre-market, or at least it was earlier this morning. And so it's going to be breaking out. Stock did beat its earnings expectations, 82 cents versus 50 cents. Lowe's beat by 1 penny, 198 versus 197. Market didn't like it, down 6% in pre-market action. And I want to tell you right now, the home improvement group, look at what's been going on here. Home improvement was at a 52-week high a month ago. And in the course of 1 month, we've gone from a 52-week high, relative high, to probably about a 7-month relative low. So money is rotating out of home improvement right now. And with Lowe's reporting, doesn't seem like that's going to help. Target is up a couple percent after hours. What an earnings report here. $2.79 versus 161 expected. 279 versus 161. So you can see the stock in pretty good form. Nice little cup. The stock is up 2% in after hours or in pre-market. So it looks like maybe we're going to try to get that breakout today on Target. TJX also with a very nice beat. Market expecting 14 cents. It came in at 71 and just broke out recently. Stock is up another 4% in pre-market today. Look at the volume coming in. This has not been a good stock, but its peers relative to the S&P have broken out. And now with this report, I think TJX could possibly start to trend higher. We want to watch that. But with good earnings and in a group that's starting to show some relative strength, this is a stock that could do well in the months ahead. The last one I'll show you is NEO. NEO reported yesterday after the bell. Look at the AD line. Well, here's the price action, and then you can see all the relative strength. I mean, it's just off the charts, volume coming in, so much accumulation taking place, and it's a trader's dream. So you got a lot of traders, probably Robinhood folks are all over NEO. In the pre-market, let me just give you, actually, we got a live market now. So let's pull up, see what NEO is doing real time. Oh, it is down. It has moved down a buck. I would not be surprised to see a little, buy on rumor, sell on news. So I wouldn't be surprised to see a 20-day test. I mean, possibly even more, just because it's been up so much. But I think that would set up great opportunity because it's a stock that is definitely being accumulated. That AD line doesn't get much stronger than that. All right, let's wrap up with the 3 you must see. First up, Boeing. I mentioned this one last night, Max Payne. It gapped up again today, but it's getting close to that June high. And I will just tell you that there are a ton of in-the-money calls, meaning market makers, it would behoove them to see lower prices between now and Friday. But even if it's not Friday, by some point next week, I really think over the next several trading days, we're going to see some pain at some point come into Boeing. And I actually like what's taking place on the chart. So I think the short-term pullback, if it does pull back because of options, could provide some opportunities getting into the stock. I know when it was 140 at the end of October, getting in at 220 doesn't sound very palatable. And I get it. I don't like to chase either. But if options do drive the stock back down, especially down close to that 20-day moving average, I think Boeing could be a very interesting trade going forward. Next up, WBA. Talked earlier about Amazon and the impact it had with some of the drug retailers. We'll look at WBA gapping down from 44 to 40, massive volume. Look at the AD line. Even though it's been going up, the AD line really not showing any confirmation there. And then the final stock, took a look at Lowe's. How about Home Depot? Home Depot trying to hang on. I would really watch from about 258 to about 265. There was your 258 high, or whatever that high was. We broke out, went up, coming back down. We've set some lows close to 260, 265. So I'm going to say 258, 257, maybe up to 265. Watch that. Of all of the stocks, I do like Home Depot, but if we pull it up on a relative basis, I think it's been struggling. There's Home Depot relative to the home improvement group. Now, while home improvement was doing very well on a relative basis, Home Depot was going down. Now, home improvement's going down and Home Depot on a relative basis is going up. I don't know if that trend continues, but as long as Home Depot holds on to that support that I talked about, this would probably be among the safer plays in that group right now. Another stock that I really like in that group is Wayfair, but these stocks have just not been in favor. Wayfair has been pulling back relative to its group, as you can see here. And of course, the group just moved to a new low. But there's something about Wayfair. I believe Black Friday coming up, I would not be surprised to see Wayfair among some of the online retailers that get a pop, either in anticipation for those numbers or the numbers themselves. I think it's going to be a big, big year. This is the first Black Friday for many of these online retailers with the pandemic in place. So I don't know. Maybe I'm wrong. Maybe a lot of it's already built in, but it just seems to me like Wayfair may get a pop here. All right, that's it for today. I'm going to wrap up. Appreciate everybody tuning in. I'll be back tomorrow over at Stock Charts for your next Trading Places Live. And again, just a reminder, we have a big, big event. This is the biggest event of the quarter, bar none. And I'm not dramatizing it. It really is. This is my favorite event. It's an opportunity for me to go through literally hundreds, I would even say into the thousands. I will be looking at so many charts between today and tomorrow, trying to narrow down the 10 stocks in the 10 industry groups. Remember, it's not just about finding 10 stocks. That would be really easy. I could put 4 renewable energy stocks in there. I mean, renewable energy has been so strong. I could find, stocks that way, but we try to balance it out and try to keep it so that it's equal weighted in different industries, in various sectors. But there's a plan in place. We want to look for those leading stocks, leading industry groups, leading sectors, emerging sectors. I mean, now with the virus, the market's starting to look beyond the virus, things are changing. This is probably going to be the most intriguing of all of our draft nights in terms of the portfolio. So again, it's a free trial. You pay $7, we refund it to you. If you haven't already tried earnings beats, give it a shot. I don't think you're going to be disappointed. Anyhow, everybody have a great day. Be back tomorrow. Happy trading, everybody.